For more on inflation and the markets, let's bring in Carol Schleif, Chief Investment Officer of BMO Family Office. And we put yesterday, it's amazing, you know, what a couple of basis points on the inflation rate can mean, Carol, because this was the lead story in the Journal, that inflation is bubbling up again. I mean, it was basically what we thought yesterday, right? There were no huge surprises, but it didn't go down. And today, I understand that the Fed's, preferred measure does include both PPI and CPI components. So if this is warmer, and we're using the word warm, not hot, if it's warmer than expected, it could be a little bit unsettling. Do you expect that?
We don't expect that per se. And actually, when you look at the PPI, which is inflation in the pipeline, for a lot of manufacturers and a lot of distributors, if you will, some of that inflationary pressure is coming down. So we would expect to see it in line. But back to your original statement that the overall inflation rate is running hotter than the Fed's stated 2%. Then again, when you look at what the average inflation rate, headline inflation since the 1950s, and you average it out, it's been 3.5%. So getting down to that 2% level is a difficult task, and the Fed's warned us for a long time that it was going to be a bumpy road down. So, the important thing is you did see the homeowners equivalent rents in there come down a little bit, and that's been one of the stickiest components, as well as it's one of the largest components in that factor. But the Fed has a lot on its plate, not only at the meeting next week, but as 2025 starts.
A lot of what happens whenever earnings are reported, it's always about expectations, and companies manage expectations, analysts manage expectations. Why do you think the Fed painted itself in a bit of a corner? Why is 2 cast in stone? As you said, the average over the last, 60 years, 70 years, has been higher, but they can't move the goalposts now, or else they're going to lose credibility, and I don't think they're going to get down to 2. So why are they cutting?
Well, I think they want to get around 2, and the reason they're cutting is because the policy rate that they're at right now is substantially above. If we're talking 2 to 3, it's still substantially above that. It's 4.75 to 5, and so from there, the Fed has room to cut and still be in that range, and they can deal later with it. Is it at 2? Is it 3? And if you recall, I mean, it seems like a long ago era, but for the Fed for a long time fought to get inflation up to 2% because it was running below that for 10 or 15 years. And that's what we're all anchored to, because we want those 2 and 5/8% mortgages and 0% car loans again.
It just seems like if we really are restrictive right now, then we should see some evidence of that. And you're using the actual numbers, and that's quantifiable the way that you did it. But if you do stock market, maybe you point out we're not as frothy as it was in the late 90s, but we're certainly could be fully priced at this point. And you look at everything else, GDP and unemployment, and there's just not a lot of evidence that if we are restrictive, that's rippling through the economy.
I think there's more anecdotal evidence in the employment market than the numbers show, than the aggregate numbers show. And clearly there's pain in the economy that's being felt that also the aggregate numbers don't show. When you look at that bottom 20%, the bottom to mid 20% of earners, they're feeling substantial pain because even while inflation is coming down, the overall level of prices remains substantially elevated. So, and you're starting to see in the employment market some edges where companies are trying to hoard workers, but if they do leave, they're not necessarily in a rush to replace them. So you're starting to see some weakness there. You're also seeing a lot of technology starting to come on the scenes that was put there as a reaction to tariffs and supply chain and pandemic. And a lot of that technology is starting to come through in the productivity numbers. So we're able to put out more goods with less people in seat, if you will. And so some of those hopefully have that deflationary impact to counteract some of the other still inflationary impacts in the system.
If the one weakness that you pointed out was that the bottom 20% are still being hurt badly by inflation, it seems counterintuitive that you wouldn't make sure that you were dealing with inflation by not lowering rates. Lowering rates when that's still the main problem. I mean, it can come back. It can rear its ugly head again. And yesterday, some people think that there was evidence in that yesterday with wages as well.
Yeah, there is a little bit of that piece in there, although wages needed, for the last 2 years, actually, again, in aggregate, have been above the rate of inflation, but nobody feels it. Because inflation feels like something that's done to you. Wage increases are something that you feel like you personally earn.
With all that, we got to go, but with taking all this into account, would you be putting a lot of new money into the stock market, or would you be, where would you put it, in small caps, or would you still go Mag 7, or what would you do?
Well, I mean, we continue to lean into an overweight in U.S. equities in particular, and moving down the capitalization scale, because we do think a lot of the policies that end up coming through in the new administration will be supportive of making things and selling things in the United States and focusing on rebuilding infrastructure and a lot of other things. And so we remain there. We would love to see pullbacks. We do expect to see more volatility moving into next year, because there'll be a lot of headline risk as every new policy proposal is announced and then working its way through to whether it actually makes it into law or not. But there's a lot going on underneath in the economic fundamentals of the United States, sort of irrespective of whoever is in Washington running the show. There's an awful lot to be happy with about what's going on here. But again, would love to see some pullbacks as an opportunity to get in.